Welcome to Access TV. Mortgage bonds continue to trade in a sideways pattern, near resistance, but above support at that 200-day moving average. The bond has shown no conviction to break out to another level, while the 10-year note continues to remain above the psychological 2% level. And you and your clients should understand this and be geared towards locking in. To explain it in a visual capacity, R1 and R2 are lines of resistance. From previous past markets, it's a real psychological line of resistance. So see how we're bouncing back and forth between the blue 200-day moving average and this tough line of resistance, R1? Breaking through that tough line, and remember, higher bond values mean lower interest rates, but breaking through that high bond value just hasn't been easy. That's why we've been saying locking since last Thursday. The market just keeps ending up on this straight line, up and down, sideways pattern. At 10 a.m. this morning, Thursday, the Treasury unloaded $13 billion in 30-year bonds, and this comes on the heels of back-to-back decent auction results. And when you have good auction results, that generally means lower interest rates. Stocks up after 6 days in a row started moving again today. Stock traders heard the rather dovish release notes from the September Fed minutes. No concern with inflation, as they don't see it moving past 2% until 2017. And as a matter of fact, one was heard saying they don't even see a rate increase until 2017. So watch that closely. After a weak September jobs report that we reported on last week for both July and August, investors feel that any rate hike might be put off until 2016, and we agree. But stay tuned, as that information can be a real market mover. Federal Reserve Bank of Minneapolis president, now I want a Coca-Cola.
Narayana Koker-Lakota.
Narayana Koker-Lakota said last Friday he doesn't believe that the central bank should raise interest rates this year, and policymakers may have to consider further quantitative easing. If you want to know more about quantitative easing, search for it on our website, accessloans.net, quantitative easing, and there's a lot of information about QE, and it's not good for capitalist societies, only as a last resort. Now I want a Coca-Cola said, bearing big changes in the data between now and September, I don't see a near-term increase in interest rates as being appropriate. And by the near term, I mean through the course of 2015. And he said that in an interview on CSNBC's Squawk Box. Your real estate agents should be advising you to lock in. We don't see interest rates shooting up anytime soon, but at the same time, we don't see bonds getting much better from here. We hope rates don't go much lower, as it would probably come with more economic pain and uncertainty. Also, keep in mind, October 15th is right around the corner, so any of our clients that have provided us tax extensions, because we're using 2013 and 2014 tax returns, we are no longer going to be able to use 2013s. We're going to have to either use 2015s alone or 2014 and 2015s to qualify people on October 15th if your loan hasn't funded by October 15th. Big changes with regard to Freddie Mac and their underwriting guidelines. Freddie Mac has moved the 5% contribution, 5% down requirement, similarly to Fannie Mae's gift program. So the 5% down may come from gift funds, and this matches Fannie Mae's guidelines. However, they have different credit risk score guidelines. So Freddie Mac's are a little bit lower than Fannie Mae's, so knowing that and keeping an eye on that is very important. There's some cash out refinance information that some of you should be aware of. Look at this chart or call us 897-4090 or in Paradise 877-5122. One of the other big changes is that the removal of the requirement for a 2-year landlord history when using rental income to qualify someone. That has been changed with Freddie Mac, which also matches Fannie Mae guidelines. There are other particular requirements associated with that. However, give us a call. Removal of required 6 months rent loss insurance on rental properties. This matches Fannie Mae underwriting guidelines. If the subject property is a second home or investment home, Freddie Mac now will allow 6 financed properties. And there's little particulars about that, but basically if they have 5 encumbered properties, Freddie Mac now, instead of 4, is going to 6. while Fannie Mae still has the 10-unit requirement. Again, little particular different guidelines for each, but give us a call to find out more information about what's available. Thank you very much, Access TV Market Update.